Hi, I'm Andrew Berman with National Mortgage Professional, and thank you for watching another Mortgage Leadership Outlook, where we go live with the greatest minds in the mortgage business, something we started back in March of 2020 when things are going crazy, and we needed leaders like Dave Savage to say, what do we do with all this chaos that's going on around us? And, you know, I had actually guys like Dave was just out there creating like content saying, hey, this is what you need to do. And he met with some of the greatest mortgage professionals out there. So with us, we've got the founder and CEO of Mortgage Coach, who was a former originator. I don't know if actually anyone realized, but he was a successful originator. And this was a tool that he used. Dave, thank you so much for joining us today.
It is good to be here. It's an honor to be here. I think I saw Kristen Messerly. I don't know if it was last week or the previous week, and you did a great job.
Yeah, no, she was great. I mean, like really, that was one of the inspiring things that said because Kristen's love for Mortgage Coach and her whole philosophy about using this not as a transaction or not even actually as a relationship, but as an educational tool. Like using the mortgage process is best served when it's being done as an educational process, and that's something that Kristen has mastered with her cultural outreach program that she's successfully sold, and just has talked about actually how the importance of using things like Mortgage Coach and tools like mortgage, the total cost analysis. But so. All right, Steve, let's go back actually into your history, because I want to talk about, your big vision about actually, using actually, the tools that you have to empower 50% of families to make the right decisions. We'll talk about that. I want to talk about, what originators need today. I also want to talk about what, as we're coming to what I like to call a profitability cliff. What mortgage banks could be looking at, but let's go into your story. So take us back. So how did you actually first get into the mortgage business?
So before I go there, I want to make sure people we're not at 50% yet, but that is the goal. Last year it was 1.7 million total cost analysis. So we're making progress. But I mean, my story starts back, like what was it, in 1986, of the fall of 1986, I got in the business. I was recruited into the business by Mel Samick, a mortgage broker, worked for Excalibur Mortgage, fell in love with the mortgage business within 3 to 6 months. I mean, at the time I was working at Smart and Final, going to college. I think I made, working so hard, I think I made $13,000 the year before, while going to college. And I think my third or fourth month in the mortgage business, I made $10,000 in a month. And I was like, I'm in,
So Dave, I'm just curious. Do you remember your first transaction, or do you remember actually like your first memorable transaction?
Oh, of course. I mean, come on. I remember when I started working for him, and he gave me the yellow pages. So dating myself a little bit. And he said, hey, this is, and I thought like, oh, I'm getting in the business. He drove a Mercedes. He bought drinks for everybody. I was getting this glamorous, helping people borrow money business. And I think, yellow pages, and he's like flipped it open to CPAs, and he's like, okay, start here. And my script was, hello, my name's Dave Savage with Excalibur Mortgage. We specialize in helping CPAs and their clients with real estate financing needs. Do you know anyone, or do you have any clients currently asking you about real estate financing? And I mean, okay, now do that 100 times, And so I would get people that would say, yeah, I got a client that has some needs. And then I would be like, Mel, like I got one, and that was, we could still meet with people. So like my goal was to getting a CPA or financial planner to say, yeah, come out to my office. And Mel would come out, he would do all the talking. I mean, it was the 80s. I grew up in Huntington Beach, so I probably looked like a redheaded punker, spiky hair, and Mel made it happen.
So, all right. So, listen, obviously you're making good money. Things are going good. It fit you well. But like, what was the point that you said, all right, this is like, what was the thing that made it hit home to you? Like where you were like, okay, I found my calling. I found actually something I could do.
Well, I mean, school was tough for me. So I am ADD. I mean, everybody's ADD now, but back in the day, I mean, I was the kid that took Ritalin. I am dyslexic, so school was not fun, not great. I mean, I was really just doing that for my dad, doing that for my grandpa, doing that because that was what I thought successful people needed to do. So I think, when I made that $10,000 a month, I mean, it was like smart and final. I'm good to go. Like, I don't know if I quit the job within a day, but probably, gave my 2 weeks notice. And college was not far behind. So once I realized, like, I can make a lot of money. People are making a lot of money, and I don't need a college degree, and I don't have to keep, punishing myself at school. It was like I found my calling. But I mean, I think it took 6 months to a year, and just the concept. Like, I learned very early that, there's two kinds of real estate deals with problems and deals with solved problems. And I was addicted to problem solving. I loved it. I loved building relationships. I mean, it was like the mortgage business was built for me. I loved it.
Wow, that's fantastic. All right. So you continue actually to go on, you open up your own company. At the, give us actually, like the pinnacle of your mortgage business. Tell us actually about that, when it was working as great as it could be. You had, a team of people working for you. Talk a little bit about that, and we'll transition to talking about actually, how you took one of your greatest tools and shared it with the entire industry.
Yeah. So I don't remember exactly how many years, but it must have been about 10, because I founded Mortgage Coach in the fall of 1996 with my co-founder and partner, Greg Wexler. But so, I mean, probably 5 to 7 years of just roller coaster in the mortgage business, because I was hardworking, because I was a good problem solver, because I love people, and I built relationships and people trusted me. I became successful with just hard work and perfecting my skills as a loan officer. But where I had my breakthrough was when I learned that, my value prop, my advice makes a difference. And I could say that to someone, and then I could show that to someone. And I do. I come from a family of accountants. My dad was a CPA and accountant. My grandpa was a CFO and a financial minded person. So, I mean, I was good, like not good in English, always ahead of my grade level, and pretty good in math. So like my superpower was my advice makes a difference. And then I would show that to people. And now the early days of Mortgage Coach, that was like HP 12C, yellow sheet of paper, and me being a numbers nerd. And then I think there's this Excel thing, legit. It was an Excel spreadsheet. And the whole Mortgage Coach story came from, okay, I had figured out this value prop. I was super successful, had a team that was closing, I don't know, 300-ish loans a year, $55 million in production. And I wanted to be like, okay, I want to be able to bring in other loan officers, even if they have no mortgage experience, and like, click here, click there, input this, out comes this, what became known as the total cost analysis. And so
So originally this was an Excel spreadsheet.
It once upon a time, yeah.
Wow.
Yeah. And then I was unique. Thank you to Mel, because he brought me into the business and said, call CPAs and financial planners. And that was unique. Back in those days, all the top producing loan officers either got their business from realtors, or developers. So like that was how you were a loan officer, or you worked for some consumer direct, TransUnion shop. There was not, these hybrid things, but Todd Duncan had started Sales Mastery, and he invited me to a panel to like tell my story, because I was, legit successful by any standard. And I told that story, and he's like, it was well received. And he's like, hey, can you come back next year and tell that story in a bigger way? And that the combination of what I was trying to do with my own company, and that stage that I was given
Yep.
really led to the founding of Mortgage Coach.
Wow. That's awesome. When we were talking about the other day, because I remember actually there was times like you can't get Dave to shut up about Mortgage Coach. Like you just can't get him to shut up. You can't get him to do actually anything else besides talk about Mortgage Coach. And I understand why now. And I understand actually because and it's part about actually a part of the this greater mission that Mortgage Coach has been kind of empowered with, and is to help actually borrowers make better financial decisions by using the total cost analysis. I mean, one of the things I think actually that's interesting is so you talked about this kind of road to 50%, to have actually 50% of the transactions in the United States to have been influenced by an originator that's using total cost analysis. So talk to us a little bit about where did that come from, that goal?
So first of all, can you hear me? I had it on mute. Can you hear me?
Okay. Yep, I hear you. Perfect.
All right. So when I founded Mortgage Coach, it was to improve the conversion, to build trust, and to deliver value to the consumer. And the premise that instead of a family getting, hey, here's your rate, here's your payment, here's your cash to close, to say, hey, you know what? Here's some options, and let's look at the cost of those options over time that matters to you. So if you're a family that wants to move up into a bigger home, let's look at two options and what's the cost over 5 years. So when I founded it, it was truly just, improving sales efficiency and improving my efficiency as an advice-based loan officer. And that, I would say, all the way up into the meltdown, it was, conversion, improve referrals, and super successful business. The meltdown came, we lost a lot of customers. I had to reduce the size of my team. I mean, it was really humbling and not a great time. But coming out of the meltdown and then Joe Patur joining our team from Ellie Mae, we formulated this mission, because we didn't want what happened to happen, and we wanted to be noble. We felt like, hey, this total cost analysis, the combination of the options and the transparency, it's truly in the best interest of families. So we came up with the mission, which is, we're going to count how many users we have. I mean, we are a for-profit business and we're a SaaS platform, but we could reshape how people get into debt in America. And so we formulated a BHAG back then, which was 2 million TCAs. Like if 2 million total cost analysis a year were created, that's enough market share that we're making social change in how people get into debt. And so we didn't hit 2 million last year, but we hit 1.7, and they were viewed 5.5 million times. So, I mean, we're really creating impact. And so now the new BHAG is 50%. Like, how can we, and we're not going to be satisfied like until we've truly reshaped how people get into debt. But the next, call it BHAG, is 50% of every loan in America comes with more than rate, payment, cash to close. It comes with options. It comes with cost over time. And it comes with strategies, like how do you pay off your house faster? How do you build up equity faster so that you can buy that next home? How can you move up faster? So that's how we got there. That's why we got there.
Yeah, and BHAG, if those don't know, big, hairy, audacious goals, right?
Yeah, and pulling that from good to great. Like the biggest enemy of great is good. And big fan of that book, and the concept of a BHAG I got from Jim Collins.
Oh, that's awesome. That's great, man. Listen, I think it's a great mission. I'm excited to see actually, you hit that goal. So let's talk about actually, in today's world, because listen, the way we do that is making sure you're empowering, originators with the best tools out there. But it's also mentality. Like, so what do originators need to do from tools and just mentality, perspective to win in today's market?
Well, I'm going to put it in a little different light, because I don't think it's just in today's market. It's this decade. I mean, 2020 I mean, we'll look back at 2020 100 years from now and say, look what happened. And yeah, COVID happened, but it accelerated what was happening. And there is this digital transition that's taking in the world, and it's all FinTech. And so, I think what loan officers need to do for the decade, not just for today's market, but literally for this decade, if you want to make this decade better than last decade, and you're a referral-based professional, and I mean, whether you're a real estate agent or you're a mortgage professional, you need to embrace technology and media. And I said a quote from the Modern Digital Experience a couple of years ago, where the biggest threat is not disruptors, tech companies, consumer direct. You guys know all the brands. Your biggest threat are local referral-based leaders that leverage technology and media. So yeah, I think that's what today's loan officers need to do. You need to leverage media. That's leadership, that's communication. I think social media is the modern day CRM. So you need to embrace it. You need to leverage it, which we do at Mortgage Coach. And then you need to leverage technology to give value to consumers. So I'm going to use this term a lot. And I learned it from the futurist of Intel, Steve Brown. He taught me this acronym, and it's called WACD. Write that down, everybody. WACD. And if you are in the retail industry, you have obsessed over this acronym for over a decade, and it stands for what Amazon can't do. Like, you need to do what Amazon can't do, and then you need to do what Amazon can do, and deliver this super slick, modern, Amazon-esque experience to consumers. And then, the only thing I would add to, I think most of the people on this call that tune into you, we're in housing, and so you might want to add a Z to it. Z stands for Zillow. What Amazon and Zillow can't do, you need to do, and what they can do, you need to do. And again, that requires technology and media. So and I could give lots of examples. Like, we're in a housing inventory crisis right now, and Mortgage Coach loan officers, I'm not saying it's easy, because it's not easy for anyone when you have 60, 80, 30 people that you're competing with to win the offer for a house. It's not easy, but there are people that are picking up market share. They're working harder for the loans that they're closing, but they're picking up market share because they're using media and technology in a very smart way. And I can list examples, tell stories, but that's what you need to do.
Listen, let's name names. So give me an example of someone actually that's putting out content out there that is a small independent. Because listen, let's call a spade a spade. I mean, Dave, I know, yes, you've got large corporations that use actually Mortgage Coach and that pay for it for all of their originators, but I really feel like, like I've seen it best used for independent originators, small to mid-sized mortgage brokers, small independent mortgage bankers. So, like, what kind of content should they be creating, and how should they actually, be leveling up their social media presence?
Yeah. So first of all, for the hundreds of names of people that I've interviewed that are on the Mortgage Coach YouTube channel, I don't mention your name right now, apologies, but just a couple. Like, the most recent one is Keith Collins. And it's in our Mortgage Coach group, and he's taking this, how he's elegantly helping families with an appraisal gap, and he created a Facebook video. It's posted on Facebook. It's educational. It's valuable. By the way, Keith learned that idea from Amber Kovark, someone that I interviewed. He saw what she did. She's using social media. Kelly Zitlow, she's got one of the best YouTube channels in the mortgage space. Denise Donahue, Dan Keller. I could go on, but almost all of these folks have something in common. They understand that just quoting rates, here's your rate, here's your payment, here's your cash to close, transactional triangle, that's being automated. Like, if all I can do is do a transaction and quote a rate, the next decade won't be better than the last decade. I need to be a problem solver, and I need to help families build wealth with real estate. I need to be able to tell a realtor that, especially in today's market, I am going to be able to get you give me a a buyer, not only will I pre-qualify them, not only will I keep my promises, by the way, that's all in the transaction box, but I'm going to actually improve their clarity and their confidence so they're willing to make a winning offer, or at least the best offer they can make. And then you need to be able to say that, and you need to be able to show that. And like with a mortgage coach total cost analysis, it's like you can say that, you can show that, you can actually deliver that. And then you need to go beyond like, okay, I can deliver that borrower experience, I can deliver that real estate experience, but now let's create some social media content around it. Let's create some scroll stopping, Instagram, Facebook, YouTube content so that you're educating your community at scale. And all the names that I just mentioned, they're all doing that. They're using media to educate and deliver value beyond the transaction. They're WACD in their business.
Fantastic. So, you mentioned actually what real estate agents want. Like, talk to us a little bit about what do real estate agents need to be successful? Because they're scared with Zillow, actually, who 3 months ago they were paying leads to. Now they're saying is the biggest enemy and threat to their business. So they're scared about that. They're scared about iBuyers. There's so much actually, as much as actually the mortgage originator has thought that their job is over for like the last 3 decades. The real estate agent is in a complete frenzy over their career trajectories changing in a different direction. So tell us a little bit about what do real estate agents need today from originators?
Yeah, well, I'm gonna talk about that in detail on the 21st this month. There's an event called the Modern Real Estate Summit. You can check it out at modernrealestatesummit.com. This is an event that's being put on by Win by Noon and Todd Bookspan. I did talk Todd and the Win by Noon crew to do this event. I'm like, guys, the time's now. This is huge. I'll help with the content and I'll be an MC at the event. But here's a couple things. So first, I'm not going to say I'm not a realtor. And what we did do is we put some of the best real estate agents in America. One of those agents is Ryan Serhant, the $1 million agent. He's done $1 billion in a single year. So we're going to put a bunch of top agents on stage to share what top agents are doing. So, but I'm gonna speak to what should a modern real estate agent expect from a modern mortgage professional. And so I think a modern real estate agent should expect a modern mortgage professional to do more than transaction. They should expect that, hey, if I give you a referral, that you're able to not just pre-qualify that person for the transaction, you need to optimize that family's understanding of how to build wealth with real estate using a mortgage. Like, for example, people don't get loans because they want loans. People get loans because they want homes. And so the modern mortgage professional needs to know how to help a family vision cast building wealth with real estate, which, it could be as simple as, what, I'm going to buy my home. I'm going to look at different options, and then I'm going to pick the best one that's going to serve me over the next 7 years. And then it could be, what, when I do a refinance, I'm going to look at, hey, what if I lowered my monthly payment by $250? What if I took that $250 and I prepaid my mortgage? How many years faster would I pay it off? And how much interest would I save? Like, if a modern loan officer can't deliver that, or if a loan officer can't deliver that, I would just say they're not modern. They're a transactional loan officer. Another thing, there's a listing crisis going on right now. And a modern loan officer, which is a mortgage coach, like you could literally say the term modern mortgage professional. If they're not a mortgage coach, I think I can make a pretty good case that they might be almost modern, but they have not really modernized themselves. Like a mortgage coach could literally help a family like, hey, here's your current home. What if you refinance it and save $330 a month? What does that look like over 5 years, 10 years, 15 years? Or hey, what if you moved up and you just, moved up into this house 100,000 more? What does that do to your net worth 10 years from now? And what if you moved up and you took the equity from your home and you prepaid your mortgage, or you bought down your mortgage and you recasted it? Like I'm seeing a lot of move up stories where families don't know it, but they can move up, get $100,000 bigger home, get an extra bedroom in a better school district, and actually lower their monthly payment. But by the way, guys, most loan officers don't know how to tell that story. They don't know how to vision cast that to a family. And so I would just say if your loan officer can't vision cast and show a family why they should list and move up, they're not a modern loan officer. They may be good, they may be great, they may be super successful, but there is another step that they need to go to.
It's but funny. So I like that strategy. I was listening. I remember who it was that was talking about it, but I was listening to the strategy of where someone came actually said, "Hey, listen, we're going to do a renovation. We're going to, we need more space." And in the end, actually, the originator just ended up actually showing actually how much it was such a better move to do the move up strategy. So they're going to their real estate agent, with actually a lead that was not meant to be a lead. And that's just priceless, which, I mean, that's one of the cool things about actually, what you've done. So without even actually anyone having to buy anything from Mortgage Coach, there's so much resources out there, from Mortgage Coach, from your YouTube channel, from your what you call it, Clubhouse, get-togethers, and obviously the Facebook group, which I believe that's not, you don't have to be a Mortgage Coach member to be part of that face. I mean, you do get the FOMA thing because everyone's talking about their TCAs, but you don't have to be a paying member of Mortgage Coach to be on the Facebook group, right?
No, I mean, the reason I create so much content on YouTube, which is free and available, and it's not about me, it's about the people that I'm interviewing. And I do that is we're not just trying to like sell licenses of our software. We're trying to change how loan officers think. And so we make our Facebook group free, Mortgage Coach Productivity Mastermind. We make our YouTube channel free. Yeah. Countless loan officers who are new to the industry are flocking that to learn how to do mortgages. But it's all about creating that change. That's our place to change. And then, of course, if you want to create a total cost analysis for a family and be an advisor, be a mortgage coach, that we monetize that. You can go to mortgagecoach.com, and whether you're a broker and you're an individual user of Mortgage Coach, or whether 7 of the top 10 largest lenders in the country build us into their tech stack, build us into their culture, we're just here to serve.
Fantastic. All right. So listen, you yourself spend a lot of time on the phone or in Zooms with some of the biggest mortgage bankers in the country. What's going on inside their minds right now? What are they worried about? What are they concerned about right now?
Well, first of all, I think yesterday, Monday, wasn't just the beginning of a new quarter. It wasn't just the kickoff of spring home buying season. I think it's the kickoff in the mortgage business of 2021. Let's reset. Rates have gone up to a point where a lot of refis are out of the money. And we forecasted that. We knew that. We are smack dab in the middle of the purchase market. And I don't know exactly what the months are, but I'm pretty sure like 70% of purchase business happens in spring home buying season. So game on. And I think they're thinking that, hey, we hired a lot of ops staff and resource to do a lot of capacity that's gone away. So that's probably stressful at the C-suite. I think it's never been harder to get an offer accepted on a purchase. But I mean, there's issues, and from what I have heard, there is starting to be some profit compression, margin compression, and a loan's not worth what it was. So I think it's the party of 2020 in the mortgage business is over, and it's time for serious operators, and it's time to trim the sails. It's time to be more efficient. And a lot of the people I talk to, it's not like they're like, I'm happy about it, but I mean, this is where the best of the best pick up market share. I mean, this is where the best operators, the best mortgage professionals that have good systems, good processes, they leverage technology, they pick it up. So, I mean, I think all in all, the attitudes are really good, really progressive. but I also think, yeah, there's some big decisions that need to be made. And most of my clients, anybody that invests in Mortgage Coach, like they're investing to be great. Like you could close a loan without Mortgage Coach. Like you got a fee worksheet, you don't need it. That's good. But the people that are our customers, they're playing to win, to be great, and to make sure their loan officers deliver the best experience at families. So I think overall, a long answer to your question, concerns, but a lot of excitement and a lot of inspiration for the change that we can make as an industry.
That's awesome. I think actually, with the mindset of where this industry was, listen, when you got into this business, it was all about maximizing profits. You just that was your focus. Like you didn't want to overcharge your borrowers. Well, you didn't want to overcharge them.
Pre-meltdown, there was a little overcharging going on.
Yeah. Well, you didn't want to overcharge them. What was that?
Before comp reform and pre-meltdown, there was some some overcharging in the business. But yeah,
you didn't want to overcharge them more than your competitor, like where the business would all go down the block. So you basically, and you just didn't want to be, a complete jerk. And then actually we got to a point where, okay, we made some mistakes. Maybe actually we shouldn't be so focused on profit, and we should be focused on maybe creating a better consumer experience, and focusing on taking care of the borrower in the best way that we possibly can. And now actually, I think we're in this fourth stage where we're proactively doing whatever we can to instead of actually using units or total production as the rate of success, but what is the experience that our borrowers are getting from working with us? How do they feel about it? And using whether it's total cost analysis or other tools out there, using tools to educate and to be involved actually in making this so much more than a transaction. I think is what's crucial, and that is what's going to separate actually originators from someone who could just run the numbers. So, and I'm just curious. So we got a handful of people watching it. I never know. Actually, sometimes they're owners, sometimes there's managers, sometimes there's originators. But if anyone's in it right now, if you've ever used the total cost analysis, just do hashtag TCA. Just in the chat box somewhere, just hit hashtag TCA. So we were talking about the other day about how the fee estimate is probably not as powerful and not actually what we should be using. And we should be using tools like, whether it's total cost analysis or someone else actually has something simpler to that, but a simple breakdown where you can compare. Actually, we got Tara Ann Hart as a total cost analysis lover, I assume. But we were talking about actually, replacing the fee estimate with something actually that's more understandable, whether it's like a total cost analysis or something actually that's more user friendly.
Yeah, well, there's three components to it. So one, it's technology. Still most fee estimates are a PDF, or they're not optimized by screen. And you can see I'm sitting here, I've got a laptop. That's a very different consumer experience. And when a family clicks on a link, are they getting, a desktop experience? Are they getting an iPad experience? Or are they getting a mobile phone experience? And it's also different between an Android and an iPhone. So I think, number one, when you deliver content, and the two most important pieces of content in the mortgage experience are one, when you give the family the needs list. Strathmore has done studies on this, that if you do that right, you use plain language that people understand, you do it in a way that's mobile optimized, you don't keep going back and forth, you ask them once, that if you give a good needs estimate, you get a higher customer stat score and you get more referrals. And then the other point, and I don't know which one's more important, I think this next one's more important because I'm Mr. Mortgage Coach, it's when you deliver rates and fees. And do you do it accurately? And of course, to just be in the transaction business, that's all you need to do is do it accurately. But if you want to be in the client for life business, and if you want to be in the borrower impact business, you need to give them options. You need to show how those options are going to perform over time. And then you need to give them strategies, because remember, they're not getting a loan because they want a loan. They're getting a loan because they want a home free and clear someday, or they want to have enough money in the bank to where just paying off their home is a financial planning decision. So I think, and that's what we've done. Is it's like technology optimized. It's a link, and then it's transparency and empowerment to help a family achieve what they really want. And what they really want is good advice, and they want that home free and clear someday. So and I think the only other link that I think we've seen, and 2 years ago, loan officers were still taking the majority of apps. It was either over the phone, in person. Now the majority of the apps are taken with a link. That's a modern way to take an application. A modern way to give advice is a link. The modern way to connect with someone in COVID, post-COVID, it's on Zoom or a streaming device like that. It's a link. Another link that's trending in the market right now that I'm seeing a lot of loan officers do is schedule a meeting with a link. I know when you and I scheduled this, I use HubSpot link. Right. A lot of people use Calendly, but I remember the first time a couple of years ago when someone gave me a link, I was like, "You want me to schedule my meeting with you?" And I was kind of like, I didn't fill it out. I was kind of like, "Hey, you want a meeting with me? Let's do it the old-fashioned way." But once I did one meeting with a link, it's like, I'm irritated now. Like, either I'll give you my link or you give me your link, but let's not.
Here are 5 dates that I'm available. Let's see if any of them match up with you. Let's go back and forth 7 times till we find actually a date and time
it's a link. And so, that's it. Like when we talked about what does it mean for a modern loan officer to use technology, I would say those are the 5 links: your app, your advice, your scheduling of a meeting, and then how you connect with a family, and then video, like BombBomb and other competitors of BombBomb have scaled because it's the link economy, and so if you're a loan officer and you don't have a bunch of links that you're delivering, HomeBot, it's a link. I mean, just look at all of the best ways that loan officers are delivering value to family. Of course, I'm talking about outside of just being a good person, listening to people, connecting with people, but it's links, it's technology.
So give me those 5 links again, because that's like, this is like, that right there is gold. If you're watching this and you take nothing away from this, if you don't sign up for Mortgage Coach, you don't actually go for the shameless plug here for the Modern Real Estate Summit. If you don't sign up for that, you don't actually subscribe to the Mortgage Coach YouTube channel. The 5 links that you must have as an originator. I think this is actually going to be the powerful thing. This is going to be the thing that we'll put in the article. Dave, what are those 5 things?
Well, I first want to say there's 4 core. I'm going to list 5. There are 4 core that I think are undeniable and just make common sense: the app, the advice, Zoom or whatever digital connection tool you're using, and scheduling your meeting. Like, those are the 4 links that power a modern mortgage professional. But I do think a video, and then I do think anything that you could do beyond the transaction, like HomeBot, where you're giving the family a link so that you can help manage their mortgage and help manage their home over a longer period of time. I mean, you're seeing an explosion of FinTech companies that are getting very serious about delivering value beyond the transaction. I met with one of them today. Well, there's a number of them. There's House Happy. Gosh, I'm forgetting the first name of one that I saw today. Something Binder. There's a lot of different ways that mortgage professionals can deliver value, but it's through links. And I really focus, Andrew, on those core 4: app, advice, Zoom, and schedule.
Yeah, fantastic. All right, Dave, always great to spend time with you. And by the way, I think if my notes have it correct, you were the 36th top originator at the time. Like, so at the kind of the pinnacle of your originations, you were 36, right? In Mortgage Originator magazine.
That's funny you brought that up, because when you and I were catching up, we talked about Chris Salzar and what what a special man he was to both of our careers. And
Yeah.
Mom Magazine was the first, call it the list. And going from memory, I think it was in the top 50, and I'm pretty sure it was like 36 or 37.
That's great. Awesome. All right. So listen, we've got the 4 links that we need to know that we know we need to do. We know actually what we need to do actually to fight FinTech, on a local level. We know actually, our mission actually, to use the tools that are out there. Obviously we hope actually you're going to use something great like total cost analysis, but some kind of tools to be able to provide education to our borrowers. Got some great opportunities for us to consume more awesome content from you. And Dave, thanks for all you do.
It's an honor to be here, man. Thanks for putting me on the stage, and thanks for helping drive the Mortgage Coach mission. Everybody on our team appreciates it.
My pleasure. All right, everyone. Thank you for joining us for another Mortgage Leadership Outlook. We are now available on all podcast platforms. So go to Apple, go to whatever Stitcher, whatever podcast platform you're using. Please just search Mortgage Leadership Outlook, and you'll be able to find it. And please subscribe. Give us reviews, all positive reviews. You could text me your negative reviews. I appreciate it. Thank you so much. I hope you enjoy the rest of your Wednesday. We come to you every Wednesday, 1 o'clock Pacific time, 4 o'clock East Coast time. Everyone, have an awesome day.